Hello traders and welcome to another video review. Today is Thursday, January 22nd, 2026. Let's take a look what do we have in the economic calendar for today. So, how about the Asian session? Japanese data in form of the exports, trade balance and adjusted trade balance were published. As you can see, all of them were worse than expected, worse than the previous readings, so very bad bunch of data from Japan. Australia, on the other hand, mixed bag of data. Employment change up from -28 to 65,000, unemployment rate down from 4.3 to 4.1, and that's about it. Situation with the London session is like we are continuing to have the World Economic Forum in Davos, and that's about it. We are waiting for the overweek repo rate and overnight borrowing and lending rate from Turkey, scheduled for release at noon. And then at 1:30 we got the publication of the account of the monetary policy meeting minutes from the ECB. During the US session, we got GDP data scheduled for release at 2:30 together with the initial jobless claims. New housing price index from Canada is scheduled for release at the same time as well. Then at 4 o'clock we got core PCE price index and PCE price index together with the personal spending. At 6 o'clock we got Atlanta Fed GDP now and crude oil inventories together with the Cushing crude oil inventories. At 7:30 we got Fed's balance sheet, and 15 minutes later we got the CPI data from the New Zealand. So the US session seems to be much more interesting than the London session. So without any further ado, let's switch to the charts. We start with euro dollar. For our time frame chart of the euro dollar is showing us deterioration from the extremely overbought market conditions after the level of 1.1766 is hit. So we went as low as the 100 periods moving average is, and even broke below this level. So let me just place this line here. 1.1671 is the intraday technical support, and those two levels are now the technical resistance levels, 1.1708, 1.1704. So right now bearish pressure, big pin bar as we spotted it yesterday, big pin bar here at the end of the move into the extremely oversold conditions, and then our side went as low as the level of 50. Perfect test of the level of 50. Right now the market is trying to bounce, but it is failing to do so whatever it is right now, it doesn't actually looks like the market is under the bullish control. For now we got this movement to the downside. We wait for a breakout above the resistance, then we can say the bulls are back, at least in the short term. Cable situation is way less violent, as you can see the movement up and down, ATR and so on is deteriorating. Even the RSI is almost flat on the level of 50. We are waiting for the breakout. Either above the 100 periods moving average, 1.3448, or even above the major level technical resistance, 1.3490. so as long as there is no breakout above this movement here, we cannot above this swing high here, we cannot say that the movement is continuing. US dollar versus the Japanese yen brings the reaction from the technical levels, consolidation, test of the trend line, consolidation, and then finally a breakout. So the US dollar versus the Japanese yen market wants to test the swing high from January 14th at 159.46. Right now this level is not really necessary. So what do we have here is a typical setup to the upside with strong momentum, breakout above the trend line. We are waiting for the test of the higher levels. It looks like the US dollar Japanese yen bulls are back. The gold market has hit the level of 4,900 as far as I'm concerned. Let me just check this out. 4,888 has been hit, so almost 4,900. Then yet again, as usual, we can say extremely overbought conditions, new swing high on the momentum, and then deterioration lower because the pullback is needed. Next, newest technical support 4690, and the market continues to move higher. On a daily time frame chart, it looks even more impressive. On a weekly time frame chart, we keep above the level of 70. The low is 67 on the momentum, and if you take a look here, you can see that this is the level of 50, let's say, and the market of gold has not been below the level of 50 since October 9th, 2023 on a weekly time frame chart, when the price was breaking towards the 2000 level with a high at 1938 this week and the low of 1809 the week before. Since there, the market keeps trading higher, and when momentum goes to the extremely overbought conditions, pullback, overbought conditions, pullback, overbought conditions, pullback, overbought conditions, pullback. It never goes below the level of 50 on weekly, so the long-term trend on gold is definitely up, and this is the typical behavior of a RSI indicator when the market is trending, despite the fact that it gets towards the level of 90, 70, 80, 90 points, then it doesn't actually matters because this market is trending, so we don't go to the level of 30, right? Occasionally we go closely to the 50 and bounce, yeah, 40, 55 bounce, 59 bounce, right? So please keep an eye on this as the textbook example of the market behavior during the uptrend, and the uptrend is being continued. S&P 500 reversed all of the movement to the downside from the level which is very, very suspicious, 6,779. Nothing here, completely nothing, except the extremely oversold conditions. One big movement to the upside, second big movement to the upside towards 100 periods moving average. So right now, this level might not be that easily respected as this one, so we just change this color for the technical support, we change the color for the technical support, and now it's a technical resistance. We're waiting for a breakout, so now the situation is very, very clear. ABC movement to the downside on the S&P 500, rebound from the extremely oversold conditions towards 100 periods moving average, any breakout, and we above the 100 periods moving average, and we test 6,996. The recent swing high on S&P 500. The market is ready, momentum is strong, 55 points. Crude oil, not much is going on the crude oil. However, as you can see, the demand zone has been tested, and it provided very nice support. So demand has been tested. Demand is between 58.51 and let's say 59.10. Movement to the upside, gap down, movement to the upside. Right now we are fighting with a 60.85, and a breakout above this level, and we test 62.32. Nevertheless, momentum is strong, 56 points. It's positive, definitely, maybe not very, very strong, but it is strong. So we should see movement to the upside on the crude oil if the momentum prevails. Now, Bitcoin went as low as we said. Bitcoin went as low as 87,263 into the extremely oversold conditions, bullish divergence between these two and these two, right? Prices, right? This is the new lower low, there is no new low, so we have a bullish divergence, and then back up we go towards technical resistance at 90,640. For now, this resistance has not been violated, so the market needs to violate this resistance to test another one, 91,950, and then 100 periods moving average. Otherwise, we cannot say that the bulls on Bitcoin are back and the market is moving back higher. For now, there is big bearish pressure. We are going from the extremely overbought conditions towards the extremely oversold conditions. Well, the question remains whether we will go to the overbought conditions yet again, because we need to break above this technical levels that we have on the chart. So for now, bulls are trying. We will see what will happen next. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.